Good morning, everyone. How are you doing? Martin Luther King Day. Markets are closed. Mr. Obama's being sworn in for the second term. Good luck to them. Here's the thing that we're going to deal with. Intuitive Surgical, ISRG. ISRG had a closing price. We ran up to 515 to 508. We always buy this during the earnings season. We're going to take a look at where the support levels are, and here were the last lows over here at 474. Then we bounced up and we came back and we tested these calendar yearly lows right here as far as 2012, the way that we ended. So let's blow up this chart right here and just let's take a look at last year. When we started the 2012 lows out, we were here. And ISRG has ran up below the 200-day moving average. It rallies up off of the bottom. We always buy the dips. But here's the thing. What we are going to look at is how this trades tomorrow, because it's going to report its earnings tomorrow after the closing bell. So we're going to have a certain trade. Either going to run this thing up higher into the earnings, and then after the bell, they're going to report. 4th of July is going to happen one way or the other. We have called the earnings report over here when they gapped all the way down. We called this trade. It was a live trade right here. The calendar dates, as everyone remembers, in the MMT network was that this was back over here in July when they reported. They came straight down here, and then they continued to gap down until we finally hit a bottom in a trade. And the thing about it is the calendar 2012 lows on 125, which is almost 1 year ago, these lows were 436 on ISRG. Then they had gapped it down. The earnings weren't that great, and I just want to update people, when they gapped it down on this period of time, we were up here at 473. And we had some put options back then on it, and they gapped it down to 429. That was an earnings gap down. And as soon as they hit that bottom, it was time to get long, and they ran that thing all the way up right below 600. That was an earnings report. This was an earnings gap back over here on 417, April, in the earnings. This was a big upset for ISRG. This was a big upset right here, which I will show people. This date was 12/18 of 2012. We went straight down from 553 all the way down here to 479 on this red bar, and then we bounced. So if they miss the earnings, we can gap down huge. What we're going to do is, based on how it trades tomorrow, one of the things that we are going to look at is the 440 put. And what is our risk on that side of the market if they miss their earnings is that the put side of the market here, you can see that it is deflated down here at $3.70. If ISRG runs up tomorrow and they bring this down to lower prices, where our risk is even lower than 370 to be on that side of the market ahead of the report, that's how we're going to trade it. It will trade a certain way tomorrow going in to the after hours. One of the concerns that the bull should have would be how many people are buying those robots right now that they use in the surgery. So that's going to be a big concern. And has spending, hospitals that buy these machines, have they cut back on their spending? These do have big moves. We had $31 off of the intraday on 117. We had a $31 day from this bottom right here. We hit 485 and we went up to 517.46. That's the kind of volatility. So buying the dips and selling into resistance always pays wonderful. Now we're right back up here toward this top. We're going into these earnings tomorrow. Here is that last low that was set on 12/28. That was 479. So we're going to look at buying the 440 put possibly tomorrow, and or No matter what happens, a big gap down, we will buy the dips intraday and sell right back at resistance levels. It's one of the bigger volatility names. This bar right here was $39 to the downside, this daily bar right here, intraday. And that was on 12/19. This bar right here was 28.75. But once we do make the bottoms, we've got the calendar yearly low right now at 490 for 2013. And that was done on 1/2 of 2013. Actually, this was the lowest low of 2013. That's your first low. Then you made your second low right in here. And what happened here is they ran that thing right off of the bottom like they do always. So we came down and we filled in where the gap was. He undercut it a little bit, but this is just standard technical analysis. The earnings volatility that will happen tomorrow is going to be huge. There will be great buying opportunities on dips. If they gap it up super high, there would be a sell gap that we would do called a sell gap ratio. So we can see that the 200 simple day moving average right now is at 524. That's a green line right here. We will take our trades intraday tomorrow. That was the range, was $8.70. Like I said, some of the daily ranges off of the bottom are huge, $31. But then you have sell down days that are just as big. So what we're going to do is take a look at what they do tomorrow on the opening bell. If they gap it down and continue to sell it down, then of course we're not buying the put side. We'll stay on the sideline until the earnings come out. Then the following morning, we will go over to the options and we'll find out what our best opportunity is going long, buying calls and or buying puts. Depending on how the gap up or the gap down, we can trade them the day after the report as far as options go. However, we will be trading the intraday equity, the shares. If they gap the shares up real big, we like to short that gap for about $10. So just depends on what. If we gap way up, we're a short seller. If we gap way down, then we would be a buyer. The reason why I was looking at that 440 put, once again, is when you get down here to my lower trend line, I'm just going to show you that 2011, this thing has been on one heck of a rip. But we do have areas down here at 434, which was this low right here. That's why we're looking at the 440 put. That's a calendar 2012. They left elbow gapped it down, and they ran it to all-time highs right here. And that's the time to be long on those dips. And that's how ISRG trades. And the earnings volatility, the upgrades, the downgrades will come after that. And then we'll size up our trade either off of the lower bottom at support for a long position and or a big gap for a short position. ISRG earnings preview, they report tomorrow at 1:22, 2013 after the closing bell.